Hi everyone. If you're starting to question the system and want to protect what you have earned, you will want to download our free Gold and Silver Protection Guide. It's a clear, easy to follow resource that explains why gold and silver have stood the test of time and how they can help you build real financial security even as the dollar weakens. You'll learn about which metals to consider and the plan that best suits your needs, not Wall Street's. So click the link or scan the QR code to get started today. You're not going to regret it. Zombie companies in danger of collapse, the $2 trillion credit bubble popping, and Jerome Powell. Is he a villain or a superhero that's truly saving America? Joining us today, Clem Chambers, CEO of Online Blockchain and the founder of the financial site ANewFN.com. Clem, always good to be with you. Welcome back.
Good to be back. I'm happy to be contrarian on your show today.
Welcome. We love the contrarian point of view. Keeps us on our toes and makes us see things from a different perspective. Zombie companies in danger of collapse. Talk to me about your latest thesis here, Clem.
Well, I mean, it's been the case for a very long time that if you take out various assets with dubious value out of large companies, they wouldn't be in business. And, you know, as long as they can borrow money, they stay in business. The moment the ability to borrow money stops, they stop. And that's been the case in markets a long, long time. And that's what the financial markets are for, lend them lots and lots of money. But, you know, if you went to somebody to borrow money, you say, I'll pay it back. I won't need it in 2 years. Just lend me some money and I'll pay you back. You wouldn't keep on borrowing it decade in, decade out, decade in. You're making all these profits, but you've still got all this debt. And that's the merry-go-round of modern finance. And it gets, you know, the tempo of that merry-go-round goes up and up and up. And one of those drivers is private credit, private capital, and it's institutions acting as shadow banks, which of course has caused lots of trouble in Asia. And now we've got that in the US. And, you know, the warning signs are all there. Everybody going, oh, we're in this market. Yes, it's great. We're making fortunes. We're so clever. And, you know, it's a mini version of the financial crisis in 2007, but the wheels haven't come off yet. It's not as big, but it's still a couple of $1 trillion big. And it's all very opaque and it's all very, you know, not at arm's length. And it's all a lot of companies are borrowing and lending each other money and getting up to all sorts of Wall Street monkey business. And we all know that has a bad habit of not ending well. And lots of companies are funded using this liquidity supply. And if it stops, they're going to stop too, in the same way as in 2007 and 2008, the American economy nearly stopped because people like GE, who would borrow money every end of the week to pay their wages, all of a sudden, people wouldn't lend them money to, you know, their overnight paper wasn't good anymore. And if the government hadn't stepped in, the wheels would have certainly come off. And that's why there was that bailout. And we are probably heading towards, if not into, a similar situation with this private lending, private capital, private credit.
How far are we from this coming to a head, Clem?
Well, when you start reading about it in mainstream media, that's normally the beginning, the first red flags. Because ultimately, if you've got a nice wheeze to make lots and lots of money, you don't go around telling anybody. You don't go around showing off. It's when everybody else finds out about what you're up to and goes, we should do that. We should get in on that. We don't know anything about it, but all we've got to do is pretend we do and copy these guys. Then we should do that too. And then, of course, the merry-go-round starts to spin up and the music starts to get crazier and crazier. And then people break all, you know, fundamentals of the game and do very well out of it because there's that momentum behind the whole situation. Then it gets fully out of control. And then something happens and bang, it all comes down in a lump. I mean, that is the classical shape of financial crisis.
Let's talk about the dollar and your views on the U.S. I know you're bearish. You have a bearish outlook on the U.S. Does the dollar keep going down for you here?
Well, I mean, the major driver of the American markets, and for that matter, the world markets, is a singular individual in Washington. I call him the wild man of Washington. And what he says has a habit of going, or at least there being a lot of conniptions around it. And I mean, he's practically on record saying the dollar's too strong. I mean, he's not a strong dollar guy. He reckons that the dollar should be, you know, interest rates should be lower. And interest rates which are lower, is a dollar, which is lower. That's what interest rates do. High interest rates, high currency. So lower interest rates means lower dollar. And, it's not the end of the world. The dollar's being incredibly strong. In fact, it's way, way too strong. And I would say he was, not that I like to agree with him, I would say he's right. The dollar is too strong. That the reason the dollar is strong, there's all sorts of financial engineering reasons for that. That makes, the picture the way that it is. And a lower dollar would be good for trade. And, when you look at the giveaway is GDP per head in the US. It's way, way out of kilter with GDP per head in Europe and in Japan. And when you go around those countries, you don't see countries that are way, way poorer than America. So what you say, well, how could that disparity be? Well, all these GDP numbers are measured in dollars. And if your dollars is disproportionately too high, then you can have a great GDP per dollar, aren't you? And that is an expression of how strong the dollar really is. Now, the dollar is really strong. I know a lot of people come on these shows and go, oh, it's the end of the dollar. Nobody likes the dollar. The dollar's rubbish. Oh, no. Dollar's strong as strong. Dollar's is still the most fantastic currency. And it could go down a lot and still be a great currency. And, of course, it would fit in with America as an industrial powerhouse. Because if you have a currency that's too strong, if people look at your product and go, God, that's expensive, I'll buy it somewhere else. Oh, they do it cheaper over there. Let's buy it over there. Let's not buy it from them. So a weaker dollar is a stronger business environment for businesses because they don't really care necessarily about inflation. And lower interest rates, well, that's good for companies because they can borrow money, et cetera, et cetera. So a weaker dollar makes perfect sense, and we're going to get it.
Well, that brings me to my next point. Powell, President Trump reiterating that he plans to fire Powell very soon. We saw gold jump on that news. Thoughts on Powell? A lot of people don't like him. A lot of people think he's saving the economy. How do you see it?
Well, the Fed is everyone's angry at the Fed all the time. Well, certainly a lot of talking heads. I think they've bailed more people out than people care to think. And I think without the Fed doing what it does, the US would be in an utter mess. And so would the world economy. So, the Fed has been the global financial regulator in reality and the global policeman of finances for many, many years. And they have stopped the wheels coming off this runaway train so many times. To say that they're a terrible thing is I think just wrong. People go, oh, they give all these bailouts. Why can't I have a bailout? Well, you have been bailed out. When real estate in America didn't go down the chute, you were bailed out. When the American industry didn't collapse, you were bailed out. When they pumped all the money into QE to keep things going, you kept your job. You were bailed out. And I think they've been, it's a relatively unpopular view. I think they've been instrumental in keeping America in good shape. Well, America's in great shape. Look at the markets. And those markets are up there because of the Fed family.
I just came back from a show, the Rick Rule Symposium, where I was on a panel with fantastic experts. And the panel was quite divided. I know some, like Danielle DiMartino Booth, don't see QE coming, but most others can't see anything but quantitative easing coming back and with a vengeance, because the only way to get out of the mess that you've outlined is to keep printing. And again, the Fed.
Well, you see, printing money is not QE. South America prints money and they get runaway inflation. America does QE, which is another kind of printing money, and they didn't get inflation. So that's the difference between the Fed and other central bankers and other governments. They came up with a method. Everyone said, oh, QE, oh, it's bad, it's going to make inflation. Didn't. Oh, okay. So maybe they do know what they're doing. Maybe they do know what they're doing. And maybe without QE, which they basically invented, without that, where would America be now? Without QE all those years ago, what would have happened? And they've been QTing, they've been putting it all back, really, really quite well. Just look at their balance sheet. They've been grinding it down slowly and surely. Nobody notices, nobody cares. That's exactly what a central bank should be doing. Doing it so nobody notices and nobody cares. And, COVID, the world stopped. Well, America didn't stop. America didn't collapse. Why was that? Because the central banks of the world bailed out the system, caused inflation in the process. That's how this stuff works. But if they'd done it wrong, it would have been catastrophic, absolutely apocalyptic. And it wasn't, was it? It was actually just lumpy. Well, you can put that down to the Fed. And So I haven't got a bad thing to say about the Fed. They have a very difficult job trying to keep the wheels on when you've got your politicians throwing money left and right, spending it like drunken sailors. And they're the guys that have got to try to keep the thing back, keep the train on the tracks. I think they've done an amazing job keeping it on the tracks. Look at the deficit. How come you've still got a dollar?
Okay, let me play devil's advocate. What about the libertarian point of view that we shouldn't have the Fed, that they
Well,
shouldn't be
that's
involved?
great. I'm
Let
not
the
an
markets
anarchist.
be free.
I'm not an anarchist. And anarchists don't believe in things like the Fed. Yeah, and if you go down the axis of libertarianism, you end up at the anarchist point of view pretty damn quick. Leave me alone. I'll get on with it. Don't make all these laws. I'll be fine. I've got my guns, and I've got my bullets, and I've got my gold. I'll be fine. I don't need a Fed. I don't need a regulator. And yeah, that's a good point of view, but it's one that leads to all sorts of difficulties when the wheels come off. And you look at the old days, when you got a crash, there was absolute economic catastrophe in the 19th century, and people don't want to look back that far.
Are you bullish gold in this scenario, Clem?
I love gold. I love gold. I've got so much gold, I changed my name to Auric. I love precious metals. I love commodities. Yes, we are in an inflationary environment. But you see, you can't blame the Fed for a load of politicians throwing money around like it's going out of fashion. You can't blame them for a massive deficit. You can't blame them for a fiscal deficit and a trade deficit. You just can't blame them for that. Yeah. In fact, you could say, how the devil are you keeping this from all falling to bits? So, yeah, you can sack Powell and get 7% inflation and then blame it onto somebody. But, the Fed have got an awful job, awful job. And it's going to get harder. It's going to get harder, and we are going to have inflation, and gold is going to go up. And gold is not only going to go up in notional terms, i.e. numerically, it's going to go up in actual value, because we're going to be going into very lumpy, bumpy times. And they are upon us. And that's why it's already gone up.
Lumpy, bumpy.
I think I spoke to you about platinum a few months ago when it was $900 an ounce, and now it's $1,300.
Yes. Yep.
Copper.
And what a yes, talk about copper. Let's talk about copper.
There wasn't enough of it before AI came along, and now AI's come along. There's just not enough of it. And what's happened to the price of copper? Not a great deal. I'll tell you, one day in the next 2 or 3 years, you will see it go absolutely.
Oh yeah, I think so. I think the copper story is just beginning. Well, since you're going down the line here, what are your thoughts on this Bitcoin run?
Well, every time something very bad's going to happen, Bitcoin runs early. So, and I've said it on a few shows, oh, but Bitcoin's strong, something wicked this way comes. Well, something wicked this way comes.
Clem Chambers, take it home for us. What do you want the folks at home to know? What's your biggest takeaway right now?
Well, my biggest takeaway is that we're in you see, before the tariff tantrum, I was saying Nasdaq's going to go into a bubble mode, which is going to be incredible. Don't write it up, but don't write it down again. And then obviously the tariff tantrum came out, and I thought, oh, the roof's going to come in here, and it nearly did come. Well, it did come in, and then it had this miraculous bounce. So I think there's, I think it's very bullish. And down at commodities, I'm not a fan of commodities. The sort of stuff I'm buying, I'm not a fan of generally, but all the pointers say defense stocks, precious metals, commodities, deep value. But out up there in crazy valuation land, the Nvidias of the world, I think there's a bubble on the cards. And that's not to say it's going to happen, but watch out for it. If you start to see that .com vertical, it's up, the bubble is on. And of course, the bubble goes up for N months like a rocket, and you can make a lot of money. But you got to get out at the right time because it's coming back down again. So I think there's a strong possibility we're going to get a end of the ball run market bubble, particularly in tech. And there's so much amazing stuff going on in tech as well. And there's so many foundational things going on in things like commodities that it's really a investors and speculators paradise. I mean, I don't like the speculators paradise sides of things because I just like to buy and watch the money roll in. But there's going to be a lot of volatility. There's a lot of fantastic fundamentals out there in terms of positioning, and people should look out for that. They should look out for, it's like copper. It's like, who wouldn't agree there's nowhere near enough copper out there? So how do you position yourself for that? You just position yourself as long as you're not expecting it to happen tomorrow, because it's already ridiculously late for the market to spot this. It's like almost unbelievable that the blooming blindingly obvious, nobody's trading it. And just position yourself and wait. It's going to happen. And when it happens, it's going to be big. There's a lot of big things coming down the line, and you've got to stake them out and wait for the penny to drop. And when it drops, it's going to be a big move in many, many different asset classes.
Clem Chambers, thank you for joining us today. Come back soon.
Yeah, I look forward to it, Daniela.
And thank you for watching. Be sure to stay tuned to the Daniela Cambone Show here on ITM Trading. Subscribe to our channel. And as always, Clem spoke so highly of gold. He's bullish gold. I sleep well at night, knowing I own gold, especially with so much talk about the dollar continuing to drop here. So I invite all of you to reach out to my colleagues at ITM Trading. Book a Calendly appointment. You could do so in the description below of the video. And they will build a strategy built around your needs, tailored to you. It's a free, simple, easy, and educational call. So do that today, and we'll see you soon.